And Andy, good morning. We're talking jewelry today.
Yeah, my specialty.
All right. So you're talking Signet Jewelers. They got earnings in the morning. What are you guys seeing at LikeFolio as far as data goes?
Well, for Signet, I think that the company's already kind of come out and thrown some cold water on this upcoming earnings release. Same-store sales not too good for some of their key brands, which include Jared, K Jewelers, and Zales. You know, the one thing I will say in terms of LikeFolio data, where we're trying to capture and doing a good job of capturing consumer spending patterns around these brands and how people talk about that, we do see some reason for a glimmer of hope for this company. You can see those last two bars on the right of this chart are purchase intent mentions by quarter, and we can see a decent uptick in terms of people talking about shopping at these stores. Now that all needs to be taken with a grain of salt because you're coming off of some pretty pathetic levels. The stock has moved down from I think 120 to now below 30. So it's a massive, massive downtrend for this company. They have a lot of problems. You know, it's essentially a jeweler in the mall, and those are two bad things to be. I wouldn't want to be in the jewelry business right now, and I definitely wouldn't want to be anchored in malls.
Every kiss begins with K, Andy, and he went to Jared. When people see those commercials, they don't realize they're all owned by the same company, right? It's all under Signet's umbrella.
Yeah, they don't realize that, but what they do is react very negatively. The reaction that what we see online, you know, I think he went to Jared is kind of right up there with he wants a prenup in terms of engagement bliss. It's just one of those things that people are just not real excited about.
So every kiss doesn't begin with K? Is that what you're saying?
Not in my experience.
Yeah, you got to start looking at those the not mine diamonds, the made in a lab grown diamonds, right? Is that going to hurt their business? Are they in that also?
I think that's called cubic zirconium.
Yeah, they have those too, I bet. All right, for more on social media.
Speaking of cubic zirconium.
Whoa, boy.
Whoa.
I know, whoa.
We're not speaking of diamonds.
TD Ameritrade Network's own Jenny Horn joins us, and I'll let Kevin have the rest of this conversation.
You are so much more than cubic zirconium.
I mean, I'd like to think so. But, I mean, Andy hit on the exact thing I'm seeing on social media today, and that is malls are just crushing Signet. I mean, we always talk about malls are crushing other retailers, and Signet is no exception, obviously. And a lot of times we compare them to Tiffany, a company that is doing so well, but I have a hard time making that comparison because the price points of these companies are just so different. So I think you have two completely different customer bases. So, I mean, Signet's got to just do something different.
If you're going to Signet, you are probably not going to Tiffany's.
Exactly. So, I mean, that is something that I think is to their advantage. But our first tweet says, Signet, why bearish on earnings? Signet missed their holiday sales. International sales are decreasing. Manufacturing facility closed and laid off 122 people. Earnings date moved from March 14th to April 3rd. This is my only concern, which can be bullish on that side. Will it help them in earnings? New CFO, old CFO leaving on April 4th, 11 million fine settlement this quarter, and efforts to restructure advertising, marketing, and laying off. So this gives a ton of reasons to be bearish.
Bearish.
Yeah.
So Mr. Lincoln, what'd you think of the movie? Yeah. It's one of those scenarios.
But so what are some reasons then to be bullish going into earnings?
Oh my goodness.
There's a couple. It has sold off 60% from that 71 level over the last, 6 months?
There's one reason. All that bad news is apparently in the stock.
In the stock. Short interest on the stock is up above 15% right now. So if they beat, or just don't have the worst quarter ever, you could easily see the stock pop. Anticipated move plus or minus $4, about 14-15%. So there are reasons that, hey, maybe everything's baked in, but the last two reports, quarterly earnings, have been horrible.
There's this thing that they don't teach you in finance class that's called relief rally.
Yeah.
When the news is bad, but it's not as bad as everyone thought it was going to be,
right,
and the stock actually goes up.
I mean, I think you could definitely be seeing that there, because this was kind of all over social media today, and not the most positive noise, obviously.
Do you have another tweet?
I do. Our next tweet is from Gina DeRosos, who says, we are still early in our Signet Path to Brilliance 3-year transformation journey, and it's exciting to see the green shoots of momentum cropping up as we report second quarter earnings today. Same-store sales are up 1.7% compared to same quarter last year. Thank you, Signet team. So this This path to brilliance is a transformation strategy, which they're trying to kind of undergo right now. So this definitely takes a more bullish stance. But I mean, will this actually happen in their
Is that from the CEO?
I was going to say, who is that person saying that?
Yeah, it might
she's
be,
pretty positive.
It might be the CEO. Andy, are you guys seeing any uptick over the last month or two in sentiment as far as this company goes?
Yeah, a little bit. We're starting to see just some glimmers of hope. I would not call it a transformation to brilliance as much as Gina wants it to be. You know, that quote's from August. I think the stock was around 60 or 70 bucks. So you got to take that with a grain of salt. You know, they're wanting to be brilliant. I think that going into this quarter, just not terrible would be a good change for the company. And so there are some indications maybe that we'll get a not completely terrible report, which could be bullish for the company. But overall, this company, yeah, it's in trouble.